YouTube, welcome to today's video. Today, Sunday, December 18th, 2022, and it's probably going to be my last video before the Christmas break. So I just like to say straight up, have a Merry Christmas, Happy New Year. I hope you all do very well and achieve all your goals for 2022 and 2023. Looks like we're going to be in for some exciting times. And that's what I want to discuss a little bit about today in today's video. I do apologize for the sound quality last time. I got a new microphone and I didn't have a setting properly set. Thanks so much for the heads up, guys. I really appreciate all your support. So let's get into it. First off, I just want to say I'm not a financial advisor, so please do your own research and discuss with a financial advisor before making any investment decision like buying gold, silver, following any strategies I discuss on this YouTube channel. It's for entertainment purposes only. The next thing, check out my website, My Road to Wealth and Freedom. I appreciate all the support, and we'll get into it. So it was a pretty interesting week. We had the Federal Reserve, Bank of Canada. I think the ECB was a big surprise. Everyone's raising interest rates. I think ECB went, 50 basis or something like that. The Fed did 50. But it seems pretty clear that that there's going to be some more pain, and very quickly, the rally that the post Fed, interest rate decision rally quickly fizzled out and turned into a downturn. And the reason why is obvious: higher interest rates are terrible for investments. So interestingly enough, though, I was just looking here at the gold price. A gold finished out the week at 1,800 flat. Silver $23.32. So platinum's $1,000. Palladium 1,700. I actually bought an ounce of platinum right before Christmas last year, and it's actually done pretty well. Probably up 20%, something like that. But anyway, the main focus I want to talk about a little bit today is gold. We'll see what oil is. Okay, oil, we got 74.29. So everything's getting ready for the recession of 2023. And let's get into some other things that I want to talk about here. A big one that came across my screen this week. Here in Canada, the government of Canada plans to bring an end to an inflation hedge tool. Here are some alternatives to investment. This is from the Globe and Mail. Federal government earlier this month announced it would cease issuing real return bonds. These are the inflation, kind of like the U.S. has Treasury inflation protected security or TIPS. In Canada, we have real return bonds. And basically, the bonds provide similar interest rate adjusted for inflation based on the CPI. Which we all know is a lie. Inflation is much higher. But anyway, on the surface, one can understand their appeal. One reason is that, but the government claims the reason why they're getting rid of them because demand for them has been poor. While we haven't had inflation like this raging for quite a long time. So, past performance, shouldn't be a reason. But now, and this is a kind of a central theme going forward. We hear this buzzword all around: counterparty risk. And what I wanted to talk about in relation to these real return bonds is that if you bought a real return bond here in Canada, and you said, "Hey, you know what? I know we're going to get inflation. I want to own a real return bond," and the government of Canada guarantees it to be good money, okay, or good currency, should I say. So you have that. Well, now they're buying them all back and canceling the issues of these real return bonds, which basically leaves investors stuck holding what? Currency, right? Just as inflation picks up, and this has nothing to do with demand for these stupid bonds. Don't kid yourself. This has everything to do with the government of Canada not wanting to pay up for a promise that they sold to investors. And that's the end of it. I.e., counterparty risk. When we think of counterparty risk, we think about the banks, who's on the other side of this trade, all sorts of things. Well, what I see going forward the next few years, and we've seen this in the UK, Japan, ECB, and eventually it's going to be the US Fed as well. Um, the counterparty risk that investors need fear most is their own governments. And that means owning government debt. There is no protection. They can cancel these, bonds, tips, and stuff like that. I don't know what the U.S. Treasury intends to do, but certainly, the government of Canada, they don't want to pay. They don't want to pay the interest bills on all this stuff, and they don't want to have to keep up with or keep investors, pay them according to CPI and stuff like that. Which is telling because, CPI is basically, a fabricated lie. It does not represent true consumer price inflation, which is, I would say it's been in probably the high single digits, low double digits for the last 10 years. We just haven't seen it in things like, at the grocery store or whatever. In a way we have. There's shrinkflation. The cost of like insurances and stuff like that have gone through the roof, cars and stuff. So yeah, anyway, they don't want to pay. So one more reason to not have counterparty risk and just go buy a piece of gold. Because what are you getting in return to these real return bonds? You're just getting cash in hand. Oh, thank you. Yeah, now I got to go. And what's that cash worth? More and more people are going to be turning towards, I think, gold in particular, to protect their wealth, to hedge from counterparty risk, governments, in a way to hide wealth. They're going to be going after. There's going to be wealth taxes galore. They're already talking about it here in Canada and in a lot of other G7 countries and that, because they know they're in over their heads. Inflation is out of control, and they are totally going to be screwed. And they don't want to. What's it called? Pay the piper, I guess. I don't know. So, let me go. Okay, in the early 1990s, so the interesting part in this article is this section here. In the early 1990s, Canada was struggling with a recession that seemed to hit us harder than most parts of the developed world. Yeah, it was a terrible time. Owing to a relatively poor fiscal situation. Yeah, like one that we're facing today. And the aftermath of a residential real estate bubble. Well, we're just getting into that. I just want to sneak peek at the next next thing I want to look at: mortgage defaults and foreclosures on the rise as interest rates climb. Yeah, this is just starting to filter into the real economy now. We're just starting. It hasn't shown up on the bank earnings and stuff. And my last video, I think I went through all of the financial rigging that the banks and the Canada Mortgage Housing Insurance is doing to kind of keep people in their homes for as long as possible, even though it may not be in their financial interest to remain so. But anyway, let's get back to this. Canada's reputation in international capital had deteriorated, and market players were beginning to question our government's fiscal responsibility and its seeming tolerance of inflation compared with the U.S. in the Ronald Reagan, George H.W. Bush era of the 80s and 90s. Yeah. Canadian finances were in terrible shape in the early 90s, and it took forever to kind of right the ship, get the books balancing again. And, since 2015, the Trudeau government has done everything it possibly can to mire Canada deeper into debt. And it's going to be hard, right? And this government of Canada thing where they're canceling real return bonds is just one, investors do not want to invest in Canada. Why? You can't trust the government. Our regulatory system is too onerous. Our government is actively campaigns against our natural resource sector, our oil and gas sector. I remember like 5 years ago, Warren Buffett was investing, and I believe it was in an LNG plant in Quebec, near Quebec City, on the St. Lawrence Seaway, and and there was so much political BS between the province and the feds that he just ended up walking away from it. And not much wonder. You can't do business in Canada. And the government is the vampire squid here, sucking uh, through taxation and all of these ridiculous things that they do, these policies and regulations that are designed to destroy our country. That's exactly, you know, that's that's what's stifling the economy and investment. I also mentioned in my last video about the landlords. Now, this is more of a provincial politics situation, but all the laws favor the tenants over the landlords in the major real estate markets of the country, and that's great. But you're screwing over the landlords, and most landlords aren't these rich, Donald Trumps. They are the ma and pa who manage to work hard, do the right thing by saving, not relying on government handouts, and making an investment in real estate that takes time. It takes a lot of effort to manage real estate. It takes a lot of effort to do the upgrades and to deal with the tenant turnover. And of course, there's always some sort of damage done to these properties. And that anyway. So, just one more thing. So now we get to finally these record high, well, not record high interest rates, but all of these interest rate rising here in Canada, all the rate increases for the past year are really starting to kind of come home to roost, and it's not going to be good. I mean, some of these are videos now, I guess, but I just want to say that. Um, like we're probably headed for a housing meltdown. And I don't know, the number of people who are going to be in foreclosure, who may be losing their homes. And, how's this going to affect things like the banks? How's this going to affect things like the real estate market here? They're already coming all sorts of like taxes against, if you own a second home. Basically, all the government of Canada knows how to do is basically destroy the economic life of this country. They are not interested in building any sort of wealth. We could have done a million different infrastructure projects. Instead, they decide to pave a little tiny road, or you know what I mean, that like these piecemeal things that are like useless and worthless. We need ports. We need LNG terminals. We need pipelines in this country, but that stuff falls on deaf ears. So I'm not all that hopeful. It's funny. I was listening to this podcast that involved Doomberg. You guys might have heard of him. He's an energy expert, or a group of them are like energy experts now. And one of their things is politicians here in Canada, but like they were speaking about Europe, will continue at every turn of events to make the worst possible decisions until everything just completely blows up in their face, and they will be forced into making the right decisions. It's fair to say that in Canada, that has yet to happen. Maybe 2023 is the year, but you can tell they're starting to get squeezed, and they can put on a pretty face and smile. Chrystia Freeland, they can make up their reasons. Oh no, there's been very little demand for these things. Well, that's fine. Good luck. Because once you burn investors, and once that trust and confidence is lost, it might be a generation before you get it back. I want to harken back to my grandparents who survived the Great Depression. People back then also lost faith and confidence and trust in governments, banks, you name it. And they held cash at home, they hoarded gold and silver, and they carried no debt. They wanted to be as independent as possible from the system. They gardened and farmed and stuff like that. So that's just one of the things that I kind of foresee in our future. Now, I don't know if it will be, as bad as the depression, but I do think there's going to be a growing number of people and investors are awaking to the fact that you just cannot trust these guys. And I mean that goes without saying, but I think it's surprising the lengths to which they'll go to um, to uh, to basically protect themselves and keep spending our money. This is all our tax dollars, you know. Um, Canadians pay more than their fair share of taxes. Trust me on that. But anyways, this goes to where can we invest? How do we kind of get out of the government, uh, their clutches, and that? One of the ways I'm protecting myself from inflation is not by buying government bonds. I don't care if they're tips or real return bonds. I'm buying physical gold and and occasionally some physical silver. But that's kind of where I want to hold the wealth that I need preserved and that I need to protect. Hedge out. Exposure to things like real estate and some stocks and that. I was very pleased to see the markets take a nosedive this past week, and I'm hoping for much steeper declines. Um, some names that kind of caught my eye: TransCanada Pipe. They had a leak the other week, and their shares were getting hit. Now they're down to, I don't know, $55, 54 and change, something like that. It's kind of looking enticing to me. That's not financial advice by any means. It can definitely go lower. Bank of Nova Scotia actually kind of caught my eye. They're the worst performing bank here in Canada. A lot of that has because of their Latin American exposure. They got a new CEO. They're having an identity crisis. Their strategy's not working. Um, you know, um, but I do think there's probably some value there. It's probably the third largest bank. Um, good dividend. I'm pretty confident that their dividend's going to be around. But again, it's not financial advice, but just kind of something to keep on your radar. I think it was trading at 65 and change. Um, it could go lower. All these can always go lower. Definitely it gets down to $50, $55 or whatever. I'd definitely be taking a serious look. Of course, the broader market would be in a major sell-off that sort of in that sort of scenario. But yeah, it's I'm interested to see how bad things get with real estate, and I'll look to be buying the banks once I see what's really on their balance sheets, I guess, in terms of real estate, because I do think they're all going to get hit. And for the astute investor, that might be a bit of a buying opportunity if you can figure out the ones that are going to weather the storm the best. Maybe go with those ones. But those are a couple ideas. I see Suncor Energy, they're trading down about 40 and change, $41. CNQ, Canadian Natural Resources. Some of these oil stocks, the gold miners, silver miners are still down there. I think Pan American Silver's around 21. Um, Barrick's around 23. So it's definitely not, it's up off the lows of $18 that we saw, a couple months back. Newmont's 65, I think 63, somewhere around there. Not the, $50, $52 that we saw at the lows this fall, but again, these are some things that I'm kind of keeping an eye on. Actually, gold stocks have been holding up very, very well as the broader market is kind of taking a dive. So um, I'm interested to see some opportunities in the new year to pick up some gold stocks. I'd like to kind of pick up a few more. I still hold. I think Agnico Eagle Mines. It's another. A lot of these are just like your blue chip gold, silver stocks. But you know what? Like that's kind of how to play it. I think. I'm not an expert stock picker. I don't know anything about the juniors and exploration and stuff like that, and don't really care to. Don't really have the time. Um, but yeah, if you want to be involved in the sector, I mean, those are some names, but I would definitely go first off physical gold. So what you want? Physical gold. Um, let's see here. And yeah, so I guess I'm going to end it off here. Like I said, I'm probably going to take a couple weeks off, enjoy Christmas, the New Year, kind of get my head straight about everything. And, if there's a big sell off between now and the New Year, I'll probably be in there buying certain stocks and stuff. Of course, if the gold price gets slammed, I am looking to pick up. A little bit more gold there in the new year. But that's it for today. Thanks so much for watching. Thanks so much for subscribing and liking the channel. Check out my website, My Road to Wealth and Freedom. I wish you all a very Merry Christmas and all the best in 2023. Cheers.